Yeah, this is Raj from ShareTrack. I want to do a very quick video on gold. Wanted to highlight how gold has continued to meet our targets and what I think about it going forward. So let's get right into it. Now, I'm looking at the chart out here for gold. Each of these candles is a 1 day candle. And I think there are a whole lot of drivers that are helping gold to be more bullish. But just to trace the very recent past, we have been traveling inside this parallel channel for quite a while now. I would say that we had a touch point here around 19th of December, and then another couple of touch points on the 31st of December and early January. And then we went on to touch the top edge of this parallel around 21st of April. Then we came back down again. We formed a bullish pennant out here. This was the bull flag, and then this is the flagpole, and this is the pennant. And then we broke out from that, and we managed to break out of this parallel channel. To break out of such a long parallel channel needs a lot of energy. And where is the energy coming from, right? We had put a target of, we had put a bullish pennant target of 3,884.34, which we already met. And when we met that, we formed something called as a topping tail. I'm just going to expand this chart so that you can see it clearly. This flag out here, this particular candle is a topping tail candle. And we were not able to extinguish the topping tail candle by closing above that. We made an attempt the following day, that was yesterday, but it ended up being a doji candle indicating indecision in the market. And therefore, we have long wicks on both sides and a smallish body out here. But this morning, we are up 0.50%, and we are already above the previous day's openings and closings. And we have a good chance of extinguishing this topping tail, in my opinion. I'm going to enumerate a few drivers for you why I think gold should continue to go up further. Because gold's bullish momentum is fueled by expectation of imminent US Fed rate cuts, with market pricing a 97% chance of rate cuts in October, ongoing government shutdown risk, and demand for safe haven assets amid global uncertainty that is characterized by central banks buying gold, big investors buying gold. Major investment banks forecast gold could reach and even surpass $4,000 per ounce by year end if rate cut materializes and if geopolitical tensions continue. The forecast for October suggests an average gold price near 4,051 and a possible closing above 4,200, offering room for upside volatility. Now, whenever I put a target based on either a bull flag or a bullish pennant or anything on the upside, once the target is met, what I am always watching for is further signs, further chart patterns. So once a particular chart pattern target has been achieved, a new chart pattern has to form. That new chart pattern could be bullish or it could be bearish. In this case, I would say one of the chart pattern I would look forward to is a bull flag forming out here. And if a bull flag forms, then I would say the possibility of the bull flag breaking out on the upside is much higher than the probability of it breaking out on the lower side. It could also be a bullish pennant forming out here. So if a bullish pennant forms also the same way, I would say probability of it breaking out on the upside is much higher than that of breaking down. Now, if I get one of those symbols out here, I would be really happy. But right now, the dominant symbol happens to be this topping tail, followed by an indecision. So I'm going to watch it very carefully today. And if today we extinguish this topping tail, then I would start looking at this new emerging pattern as either a bull flag or a bullish pennant. And that would give me more bullishness. And also supporting me is the market sentiment, which is super bullish, MACD, which is also bullish, momentum, which is pretty strong, and RSI is overbought, but it's not where it has gone in the past before it turned around. In the past, it has gone all the way up to 84.70 on the RSI scale before turning back. So I don't think RSI is a constraint for the price today. I think we'll have to watch what happens when the market opens. We also had news that Fitch said the government shutdown and institutional erosion is not going to be causing any change in the US credit rating, which was a bit of a surprise for me. But I think the market is responding by pushing gold up today, disagreeing with what Fitch is saying. That's at least what I would imagine. I'd like to get your feedback, guys, and let me know if you have invested in gold, and put your comments down there. It would always help me. And one of the things I would like to say is that the best way to hold gold would be physical gold, because there is no counterparty. You pay the cash, you take the gold, it sits in your safe, and that's it. Right. But the downsides is the security expenses and the security risk and the portability issue. And also, while selling physical gold, you lose some money because they do some purity tests and deduct a little bit here and there. The other best way would be to have it in an ETF, but then you have counterparty risk. If the custodian messes up something, then you lose the gold. So you have to be very careful how you handle gold in your portfolio. And yeah, that's all I have for you today with regard to gold. I'll catch up with you again in the next video. Bye for now.